Good morning, everyone. This is Daily Trading Analysis with the market forecast for today, 21st of October, last day of the month, first day of the week. So, quite an interesting day for your monthly performance and your weekly performance. Don't ruin your day today because the last month performance can be highly impacted if you trade today without consistency, without risk management. So don't ruin your month on the last day. And remember to start in a good note tomorrow and today, this week, and the new month of November. So let's start with Nasdaq. This is Nasdaq right now, overnight pre-market. So we are holding 11,500. Right now, Nasdaq is trading 11,515, but we are more or less holding the structure that we created on last week. We flashed due to Apple and Amazon earnings, but we pushed on Friday super strong, and it was quite a move in which you have a lot of opportunities to trade the Nasdaq trend, as I was showing in my short during this weekend. Plenty of opportunities to follow the Nasdaq trend, quite strong trend for you to take risk of several moving average and also have that consistency during the day. I mean, Nasdaq trend was super strong, so you have plenty of opportunities for that to take advantage. So in the 2 hour, we are seeing 11,450 strong support now that we are holding, and strong resistance ahead 11,700. 700 to 800 is quite a strong pivot. If you look into the 4 hour time frame chart, we have the weekly high at 11,734, this blue dot line, and we have these two pivots. So ahead we have strong resistance since more than 2 weeks ago. For sure, the first resistance ahead is 11,800 more or less, and then we have the psychological level to 12,000. So watch out for those. The daily that we closed was super strong. On the previous week, we had a bottoming tail, this red candle, strong buyers, and then last week we have big momentum. If we check the weekly, we can see that we've been quite strong the last couple of weeks, and we are reaching this key level, this flat top on the weekly at 11,700, 800, more or less. That range is going to be super interesting. Shorts will be watching, so watch out for opportunities, and if you want to short the market, those are quite good levels ahead. We are doing, this is the 2 hour chart, we are doing higher lows and we are coming into this resistance. So this is a flat top ascending triangle setup that might resolve this week depending on the economic data. This week, as you should know, this week is super interesting for interest rates. This is FedWatch tool. We are pricing in 87% of 88% of probability for a 75 basis points interest rate hike on Wednesday. So if we check the economic calendar for Wednesday, on Wednesday at 2 p.m., we have the press conference and the interest rate decision. We are expecting to go from 3.25 to 4%, meaning 0.75% or 75 basis points. So that's already priced in. I think the move that we had the last couple of weeks and the fundamentals are supporting this kind of interest rate hike. So if we meet expectations, I think we can be sideways or slightly bullish, but I think that 75 is already priced in. So be careful, because maybe we are not going super strong, but it's already priced in. So be careful with your expectations from the market. Let's review today's Monday, October 23rd, 21st. So we have Europe GDP growth rate way lower than the previous one. As you can see, for Europe, we got 0.2 and the previous one was 0.8. So we are decreasing 0.6. We were expecting, obviously, quite a slow in the growth, but this came lower, 0.1 lower than expected. This is flash quarter over quarter. So we have to confirm year over year. Even more decrease, 4.3 to 2.1. We were expecting 2.5. So Europe is slowly decreasing the growth. So perhaps not into a recession, because we are not seeing yet negative growth, but for sure Europe are growing slowly. Inflation rate also hotter than expected, so this is quite key for this week's overall sentiment for the FTSE, the UK 100 index, and also that this may impact a little bit on the US markets, but we are having year over year from 9.9, the previous inflation now is 10.7. We were expecting an increase, but this came hotter than expected. 10.7 month over month, from 1.2 to 1.5, again an increase month over month, and the core inflation is also increasing. So core inflation and inflation are increasing and growth is decreasing in Europe. So be careful, watch out for weakness on the Europe markets if you're trading that, and perhaps some kind of impact in US markets today. Tomorrow, we talked already about Wednesday. Tomorrow, today is not, I think we had Chicago PMI maybe, but I don't think any of these may impact today's price action. Maybe we can see slightly continuation from Friday or trading sideways in a range. I don't expect big moves today, but be careful tomorrow. JOLTS and ISM manufacturing PMI. JOLTS openings and jobs quits. JOLTS is the job openings for all positions that are not filled on the last business day of the month. So JOLTS are coming the last day of the month, and we are expecting, obviously, a decrease. Well, the market, are expecting a decrease in job openings and more or less the same job quits. Forecast is slightly increase in job openings, because maybe people is not willing to accept those offers, and businesses and companies are still opening jobs, trying to catch those people interested in working, those workers. But ISM manufacturing PMI, I think, might have bigger impact than JOLTS, but both, watch out for both. Half an hour after the open at 10, ISM manufacturing PMI 50 is the key level. From 50.9, we are forecasting 50. That means above 50 or equal 50 means slowly decrease, but we are more or less destroying production and destroying the economy in that way. So the purchasing managers is based on purchasing and supply executives. So this survey, as you can see, it goes lower and lower from 62 last year at this same month, October, to 50. So obviously is this lower growth in factory activity, and that's good for the current situation of the market. So today, nothing. Tomorrow, manufacturing PMI and JOLTS job openings, and Wednesday is the big day. So for now, we have to watch out for that. Let's see the dollar. Dollar is still quite strong, pushing this pivot that we identified on Friday. It's actually, honestly, quite strong. I was hoping for this 110 to hold resistance, but it's actually holding support. Is trying to build some kind of market structure or maybe a move up again. So we will see what dollar Now that the big tech companies reported earnings, maybe the dollar is slowly pushing up, but I don't think dollar will reclaim 112 that easily. I think this previous support will see a lot of supply, a lot of resistance, and maybe I expect the dollar to maybe find double resistance here for a move later again down to this 110. So that could help, as you know, the overall economy, the daily for the dollar. We are seeing a big bounce of 109, but I expect dollar to continue weakening, and watch out for this resistance, this ascending support that broke. And I think in this area of 112, we might have a lot of supply, a lot of shorts, and I think shorts will jump again for more weakness to come for the dollar. Yields, 2-year is jumping quite a lot, 1.42% on the day-to-day. So yields are increasing ahead of this Wednesday. We are still pricing in 75, but yields are slowly bouncing from these two levels. As you can see, quite clear levels. This is the 2-year. The 10-year is also not as big as a bounce as the 2-year, but the 10-year is also bouncing. I expect resistance at these levels not to break this 4.12 for the 10-year, and the 2-year, I think 4.5 would be psychological level. But for sure, we need to see weakness coming from the yields for the upcoming weeks and months for the economy to start going more bullish. The TLT, corporate treasury bonds, if you check the daily, we got quite a good bounce, but I think it's time for a pullback and start to build some kind of market structure support for the break of 100. It's this level. And then if we check the weekly, you can see that for weeks, treasury bonds have been going lower and lower and lower, and we broke this previous support, and we are now checking this support area. And I think 102 would be the next level if we continue pushing on the weekly. High yield corporate bonds, strong weekly chart. This is good. These are high yield bonds for corporates, and we broke quite strongly to the upside, and this is part of the reason I think why yields were pushing, and we saw a lot of momentum to the upside on the overall market. If we check the 1 hour, not this one, the 2 hours, sorry, we had this pivot. I think I can take this one. We had this pivot, and we basically broke with quite a nice stair stepping up. A lot of wicks right now, so perhaps this 75 level will meet a lot of supply again, and we can see a pullback. But as long as high yield corporate bonds are going bullish and we see perhaps weakness from the yields, everything will be okay, and dollar will continue pushing lower. That will help for sure to the Nasdaq. That is right now. Let's finally check Europe. Well, not Europe, but United Kingdom, UK 100 is right now dealing with all these weeks, and the FTSE I think is quite strong now that the new Prime Minister is clearly stating their plan for the future. Maybe we can see some break and a nice move up for the FTSE and for UK. For Europe, I think the economic data today is quite a hit, but we will see if UK can break and can carry some of the momentum on the rest of the European markets. Energy, crude oil right now is seeing weakness. As you can see, we hit $88 88.5, 88, 89, we rejected, and right now we are seeing quite a lot of resistance at that level and coming back to 85 perhaps. I'm very long term for crude oil. I think it's quite clear that demand destruction will hit this commodity quite hard, because I don't know about you, but for me, the price at gas stations is quite crazy. I don't think we'll be able to support those levels, those prices next year when yields come approach the 5%. And I mean, that would be crazy for households and for people working with a car. Crude oil needs to chill, needs to go lower and to start building towards 73, 75 regular levels. And hopefully we can see better prices at gas station. Natural gas, strong demand from 5 ahead of winter in Europe right now. Climate weather is quite good here in Europe, but maybe in November or in December we can see strong weather now, strong winter coming. So people expecting to go bullish on natural gas for sure. This is quite a good move on natural gas, and it's right now at 6. But we will see. If we check the slower time frame, this is the 5 minute. This 5 minute is super strong. So you trade this one. It's quite hot right now, and it's trying to break this previous support. Is now resistance. This level is trying to go that way. Previous support. I think 650 is the key level that we might see in the short term, but we will see. 7 is quite a level, and it was the neck of the previous head and shoulders that we had, 750. So I was expecting some kind of bounce, but this is going quite bullish, and perhaps people starting thinking for the future in the winter in Europe, and this is affecting prices. So we will see. So finally, let's go back to the Nasdaq. Let's check. Still sideways, still trying to build, consolidate right here, and let's see in the open if we can break higher. This 11,700 would be quite nice if you are bullish. I'm personally bullish, and I will try to look for longs of pre-market low or even 11,000. I think this pivot, this level, 11,400, this interaction and this market structure that we have in the 15-minute would add a support, nice support to take some longs for the break of prior Friday's high and an attempt for last week high and this big resistance area. So I'm bullish. So we will see. Apple, Microsoft, Tesla are in the red right now, nothing big. Amazon is the only one seeing some green today. It's all gapping down. SPI is all gapping down, but I think it's going to maybe open flat or more or less. And the VIX is actually surprisingly gapping up and still building momentum to the upside. So be careful. I mean, VIX was super weak these last days, couple of weeks. That's why we got this nice momentum on the overall markets, but it's time for a pullback. It's in the middle of nowhere, so I expect some kind of push on the VIX, but I think it will not affect a lot on the overall markets, and we can build some momentum to the upside in the Nasdaq and in the S&Ps. So we will see. The open, it's in 1 hour. Remember, stay patient, stay calm, watch your levels. As always, thank you for your time. If you have any questions, you can comment down below, and I will try to respond to all of you. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember, I upload new videos every single day for market forecast, market updates, and market recap. You can also check my shorts videos and my how to trade and trade reviews during the weekend, and the live stream that we had for Apple and Amazon earnings last week. That's also very nice. I tried to upload very interesting videos and content for you guys to learn and that's my job. Try to show you the information that I'm following, the key data that I'm checking to build my plan and to build my account trading Nasdaq futures. So I appreciate your time. I see you in a couple of hours with the market update. Remember, discipline and risk management are key for success. Don't ruin today your month. This is the last day of the month. So stay safe, everyone. See you later.